Hey guys, welcome back to my channel, Sharehouse Talks Investing. And in today's video, I'll actually discuss the trading platform I'm using. And as you can see, it's Trading 212. And this is a great platform to use in my opinion. And there's some great benefits to using this platform as I highlight in the window. There's a zero cost for investing. There's a zero cost for investing in stocks and shares either. There are over 10,000 global stocks and ETFs listed. You can also buy fractional shares. There's no foreign exchange fees, and there's unlimited instant trades. Now, as you can see from the investment broker comparison table, Trading 212 is highly competitive when compared to the other trading platforms. Now, I must mention I haven't actually used all of the platforms listed. I have, however, used Revolut, and from my own personal experience, I found Trading 212 a far superior product. And as you can see from the list, there's numerous benefits to choosing Trading 212 over the other platforms. Now, I'm not gonna go through the whole list of benefits, but if you just pause the video, you can actually take a look yourself and see what the benefits are to choosing Trading 212 over the other platforms. So guys, if you're thinking of investing and choosing the Trading 212 platform, I've actually left a link in the description below. Now, if you click on that link, and then you deposit £1 into your Trading 212 platform, both myself and you will receive one share worth up to £100. So it's really a no-brainer. We both win. So, I would definitely recommend, if you're thinking of joining the platform, clicking that link below. So the Trading 212 platform is available to download on the Apple App Store and on the Google Play Store. And it's also available as a web application if you prefer to use the desktop or laptop. So once you've signed up for the Trading 212 platform, there's three particular options within the actual platform for you to use. And one of these is called Trading 212 Invest. So within this particular option, you can invest for free in real stocks and exchange trade funds. And there's no commission or fees when you're investing using this particular option. The next option is the Trading 212 CFD option. So for those of you wondering, a CFD stands for a contract for difference. And this is basically an arrangement made in financial derivatives trading where the difference in settlement between the open and closing trade prices are cash settled. Now, I must mention, contracts for differences is an advanced trading strategy that is used by experienced traders. And I won't be covering this in my series because we're going to be discussing investing and not trading. And the third option is the Trading 212 ISA. And this is an individual savings account that allows you to invest tax-free in a zero commission stocks and shares ISA. Now, there is an actual limit to the amount of money you can place within the Trading 212 ISA. And during the 2019 to 2020 tax year, that runs from April 2019 to April 2020, the maximum amount you can actually place within this ISA is £20,000. Now, it is possible to split this ISA with maybe any other ISAs you have. So you can maybe split £15,000 in a Trading 212 stocks and shares ISA, and then a £5,000 in a cash ISA. But the maximum you're allowed is £20,000. And then in the next tax year, it renews, and then you can add another £20,000 on top of any money you've already have in the stocks and shares ISA. So it does roll over in the sense that you can keep putting £20,000 every tax year in. Another point to note, guys, is that the Trading 212 ISA is free of capital gains tax. So as an example, imagine you invest £10,000 within the Trading 212 ISA and your shares perform well and are now worth £30,000. So this is a profit of £20,000. So now you would normally have to pay capital gains tax at approximately 10% if you're a basic rate taxpayer, or 20% if you're a high rate taxpayer, on any growth in the value of your investment above the annual allowance of £12,000. So in other words, you would have to pay capital gain tax on £8,000. So even at the lowest capital gains tax rate, that would cost you a charge of £800. So by buying shares within the Trading 212 ISA, you're effectively saving an £800 tax that would otherwise be charged if it wasn't within this tax-free wrapper. And the final point worth highlighting is that any dividends earned within the Trading 212 ISA are tax-free. So each year, each individual is given a dividend allowance of £2,000. So you only pay tax on any dividend income earned above this dividend allowance based on what tax band you fall under. So a basic rate taxpayer would pay 7.5% tax on any dividend above the limit, and a high rate taxpayer would pay 32.5% tax on any dividend over the limit. So using our previous example, if our stocks and shares ISA is worth approximately £30,000 and we have a dividend yield of 10%, this would mean that within that tax year we would potentially earn a £3,000 dividend. And because £2,000 is typically tax free, this would mean we would pay tax on £1,000 because it falls above that threshold. And if we were a basic rate taxpayer, we would pay 7.5% tax on the £1,000, which equates to £75. However, because we've invested in the Trading 212 ISA, we do not have to pay that tax because any dividends earned, as previously mentioned, are tax free. So we have a potential saving of £75, which we would otherwise pay if it wasn't within the Trading 212 ISA. And the final point worth knowing on the Trading 212 platform is that it is authorized and regulated by the Financial Conduct Authority. So any funds deposited are protected by the Financial Services Compensation Scheme up to £85,000. So now I'll go over how I plan on going from £1,000 to £1 million. And the way I intend to do this is through the magic of compounding. So compounding is basically the process in which an asset's earnings from either capital gains or interest are reinvested to generate additional earnings over time. This growth calculated using exponential function occurs because the investment will generate earnings from both its initial principal and the accumulated earnings from preceding periods. And this phenomena is a direct realization of the time value of money. To illustrate how compounding works, I'm going to use the S&P 500 index as an example. And for those of you that are not familiar, the S&P 500 is basically a stock market index that measures the stock performance of 500 of the largest companies listed on the stock exchanges in the United States. It is one of the most commonly followed equity indices in the world, and since its inception it has generated an annual return of approximately 10 to 11%. And for the purposes of this compound calculator, I'm going to use the 10% as the interest rate. So now let's start with the initial balance of £1,000, and I've applied the 10% yearly interest rate, and the compounding effect will be over the term of 23 years. And I plan on depositing £1,000 monthly within the stocks and shares ISA. Now, this may seem excessive to some, or it may seem minimal depending on your own financial situation, but for myself, that is what I'm comfortable with investing. So now I'm going to hit the calculate button and let's see what happens. Now, as you can see from the calculation projection, our total monthly deposits over the length of term 23 years has been £276,000. And as you can see from the calculation projection, we have an initial balance of £1,000, and then we've invested £1,000 monthly over 23 years. And this has netted us £276,000 total of monthly deposits. And over the term of 23 years, this has actually given us an interest return of £807,308, almost 4 times our initial outlay in terms of our initial balance and deposit. And then this leads to the final investment value of over £1 million. And if you look at this table below, you can actually see our yearly deposits have stayed the same. But because of the magic of compounding, every year the amount of return to interest has increased. So in the first year we had approximately £775 accumulated through interest, and in the final year the return from just the interest was £102,000. And that, my friends, is the magic of compounding. Hey guys, so now that we've discussed how Trading 212 is my preferred platform, and how I plan on going from £1,000 to £1 million. In my next set of videos, I'll actually show you my current portfolio and what it's currently worth, how much it's gained or lost, which are the current companies I'm investing in or intend to invest in. So make sure you hit that like button, subscribe so you can follow me on my journey, and as always, please leave comments and I'd love to hear from you guys.